Welcome to US CAD Discovery number 4, video commentary. We're going to be talking about what we found and how it'll help you to profit from PipJet or really any other trading strategy you'll want to develop yourself. And that is the EU, the Euro session range, has gone down dramatically. Why is this so important? That can be summed up in 2 words. Stop loss. In other words, risk control. Guys, trading is about controlling risk appropriately. That's one of the fundamental characteristics of trading, risk control. It doesn't matter what you're trading, what pair you're trading, what strategy, what market, doesn't matter. Risk control. When you trade the Asian session, you count on a specific average price range, high to low, that has historically occurred and is still occurring. So if you know that the US CAD's average Asian session range has been 40 pips, for the past 18 months, you can adjust your stop loss and profit objective accordingly. So, that's with regard to the Asian session. You know with a high degree of precision what the range is going to be in the Asian session. You can adjust your trading strategy accordingly, your stop loss, your profit objective. In other words, you can control your risk. However, and this is a big however, what happens when neither your stop loss or profit objective are reached within the Asian session? Suddenly, the EU trading session starts. And this can happen depending on where and when you enter the trade. In that situation, you've got 2 options. Either exit the trade at a loss or exit at a smaller profit than your strategy aimed for. Exit before the EU session starts so you aren't exposed to its wild price swings. Both of those are valid steps. However, wouldn't you prefer to exit the trade with no loss and even with the possibility of its full profit potential? All right? Of course you would. If it was any other pair but USD CAD, it would be quite hard to achieve any of that because the EU session tends to be very wild and unpredictable with much larger ranges, meaning large stop losses, very high risk. So you entered the Asian session with your trade and a predetermined risk, a predetermined stop loss, a predetermined profit objective, and then suddenly, bam, you're exposed to the European session. Now the game is very different because of the very different type of volatility in the European session. Okay, let's look at a few examples here. This chart shows us the pound dollar. It's a 15-minute bar chart, so each one of the bars here represents a 15-minute time period. Point A, the Asian session starts. Point B, the Asian session ends. Okay, so this area right in here, this is the Asian session. The brown dotted lines here, that represents the range of the Asian session. So between these 2 brown dotted lines is the range. In this case, the high of the session was 1.5502 and the low was 1.5466, which means the range was 36 pips. This is a downward moving price channel, which we already discussed previously. A very accurate price channel to trade. The red arrow represents the high and the low of the European session, 1.5597 and 1.5429 respectively. A 168 pip range. Compare that to the 36 pips of the Asian session. So in this pound dollar example, you can see clearly the huge importance of the EU sessions in relation to the Asian trading session. Any robot or manual trader trading the Asian session range would have set their stop loss according to the range of the session. Okay, but look at how the market moved during the EU session. And imagine the implications if a trade had been kept open during that session, which may be required at times due to the rules of a given strategy. This is a huge problem for most currency pairs, and that's what prevents many trading systems from profiting consistently in the opportunity-packed Asian session. Can you imagine relying on a 36 pip range as the basis of your stop loss criteria and then suddenly getting hit with 150, 200 pip moves? Okay, this example happens with most liquid traded pairs. Remember, your number one job as a trader is risk control. You control your risk well, you can make a lot of money. So anything that can help you mitigate risk is a must. As a rule, the lower the EU session average price range, the higher your profitability ratio can be. And that's what leads us to what we discovered. USD CAD's trading session has been getting more and more profitable due to the many elements that we've been covering. Tick volume, increased spread, correlation between the two currencies, US dollar and Canadian dollar. Add to that, we discovered that the currency pair also has the lowest risk level of all the other pairs. Due to the way it behaves after the Asian session, in other words, throughout the European session. Let's look real quick at some stats here. This will give you a much more vivid picture of what I'm talking about precisely. Average European session range 2008, 126 pips. Okay, for the USD CAD pair. 2009, 130 pips. 2010, we can see the average session range is coming down. 2011, down even more, 76 pips. 2012, this is the golden opportunity, folks. Right now, 57 pips. This is big stuff. A gradual change. 2008, 126 pips. 2012, 57 pips, all the way up, to the end of May. This means one thing: high profitability, low risk for PipJet traders, or really any trader trading the most profitable session, the Asian session, and trades still into the next session, the European session. With other pairs, going wild in the EU session, USD CAD almost always allows trades that were entered in the Asian session to remain active throughout the EU session, and with a tight stop loss, meaning, of course, much lower risk. That's what we're talking about here, throughout, lower risk, and that's what you should be aiming at. USD CAD is the only pair that has such great trading conditions during the Asian session. It's the only pair with such a great cushion in the EU session to make sure that the trade can be kept active much longer, greatly increasing the chance of its closing profitably, but at the same time not allowing a high risk for the opportunity, and that's a very key point. So again, how does PipJet profit from this discovery? When we were designing PipJet's strategy, and this was some time ago, one of the main concerns of the strategy was how long should we keep trades open? Because remember, the longer a trade is open, the more time that it has to breathe, reach its profit objective, and all that. But there has to be a balance. You have to be careful about the market conditions you're entering while keeping that trade open for a longer period of time. So while designing the stop loss and take profit criteria of PipJet, the element of time was key. The term time referring to the optimal lifespan of a trade before either the profit objective or stop loss was reached. Quite a few models at the beginning based on the get out of the trade no matter what as soon as the Asian session is coming to an end logic. But then as time went on, we started tweaking the strategy, understanding better how USD CAD behaves in the European session. We began testing this approach around 2 years ago. Now back then, when we looked at previous years of USD CAD during the European session, we found it was a bit risky to let the trade ride into the EU session. As time passed, we saw the shift, a gradual shift in how the pair behaves during the EU session. Historical data and forward data showed us clues that the EU session range was becoming smaller and more predictable. And that spelled for us a great opportunity for extending the lifespan of the robot's trade so it can capture more profit. So taking that into account, we started developing a strategic approach to deal with the EU trading session so that the robot could continue with open trades into the EU session. We managed to identify certain parameters within the robot's trading logic that we have to admit was like striking gold because of the end results of what we found. Today in hindsight, we see what the results were of that. The profitability, the accuracy rate skyrocketed. The robot became much more consistent. By the way, take a look at our long-term trading account, which was open in August 2010. Obviously, look at the other accounts as well. You'll see that the robot has been trading almost flawlessly for nearly 2 years now. And we attribute that to how the strategy copes with the EU session. The cushion that the EU session provides for the robot to exit trades profitably or with a small loss. That has to do with how the EU session has changed over the past few years. Okay guys, thanks for watching Discovery number 4. Make sure you watch the other videos if you haven't. They're all educational. We think you can learn a lot, whether you end up becoming a member of our team or not. They represent a huge opportunity for traders to exploit fully the same way that PipJet does. So thanks again, and good luck.